It can kick off some new month type of repositioning.
Hi, once again, everybody. Welcome back to the CommStock channel. I'm Marlin Bowling with you. Thanks again for joining us for another episode. And we're going to take a look at Monday's market action this time around. Make sure you like these videos, subscribe to them by clicking that bell icon down below, and share these videos with others as well. Well, today my guest happens to be Joe Camp. He is with CommStock Investments. And Joe, I wanted to have you on board on a Monday because we had some volatile market action to start out the week. And even though, for example, on soybeans, they closed lower, if you look at where they were on their journey during the course of the day, to me, I was fairly impressed with the way that they actually closed. Corn was a little higher, wheat was higher, but soybeans came way off of their earlier lows. For a while, it looked pretty terrible. But now what?
Anytime you're talking about a 20-cent or more rebound from the session lows, that's quite the change of events in a single session. And particularly when it does start off a new week like this, it's about to wrap up the month of July, so that can come into play. I think there are other influences to factor in when we talk about August coming up. We had August options expire already last Friday. We'll have first notice day coming up here to coincide with the switchover of the month. So that's a factor with the August soybeans still under quite a bit of pressure, but the rest of those contracts rebounding pretty considerably at the close. Now, technically, we still got to watch out for what was a new down gap opened on the break lower to start this week. But it's a relative win here for the bulls that have been trying to pick a bottom. That's a potential sign of exhaustion for the sell-off here, but we'll see about Tuesday and the rest of the week.
Now, when you look at soybeans, are you now focusing on the November contract?
I am still watching the dynamics of the nearby delivery window and how we have this sort of in-betweener month with September, which is the closest to the $10 even mark at the moment. So that can be key technically, even with a lighter volume relative to the November, you still have that nearby influence technically to keep track of, but it is, again, more active, more volume and open interest now to the new crop November. We should wonder still, though, if there's going to be, again, this window of where the old crop is remaining important, those end users trying to get the rest of what they can out of the old crop. And for what it says, too, about the new crop expectations and maybe what could be a delayed start of harvest in many places because of the tardy planting window for so many of these crops. But, yeah, the November contract now within at one point less than 20 cents of approaching that $10 mark, and then to rebound for a close here at 1039.5. That is quite the difference of start and finish today.
Well, let me ask you this then. I know you follow the commitment of traders numbers, and they should have come out late Friday, and that would be based as of data that would be taken last Tuesday. Is that right?
That's right. So each of the commitment of traders reports does track those different trading categories, the managed money, aka the hedge funds or the commodity trading funds being the closely watched one, along with the commercials, because of how their positions reflect a different activity from the producers selling late last week or early last week rather on the bounce, and then probably some give up selling as well later on. But you can see that in the open interest numbers, some of this short covering on the part of the funds shifting towards new contracts being opened because of farmers finally making some old crop sales here. It's going to be worth watching. One graphic I did want to bring up was the trader positions for corn. And if I can share my screen, I'll show you where we're at on this total managed money corn position. We can see that in the red line is the hedge fund positioning, the net longs minus shorts, in this case, just record net short being achieved for corn this month. You had a little bit of covering of that in the latest report, but overall down near the bottom, and wondering if we're going to see an extent of it be realized, or if they've got more ammo they can add to the mix. I just reference back to the last time that prices were about this low was in 2019 or in 2020, where eventually you saw that briefly in 2019, but then for a more sustained period after 2020, that market bottoming out when the hedge fund position did, and ultimately leading us in towards these years of 2021 and 2022, where by and large those hedge funds were pretty bullish in the grains. A similar picture for soybeans, where they're at a record net short and now trying to look around and wonder if others are going to add to it or if we'll have a period where we take some profit.
Well, we did have a couple episodes of some sales of soybeans last week. Just wondered if that's finally open up the gates a little bit here or not. What do you think here?
That could be the saving grace, and what was partially the source of support for today's turnaround was that you had talk about China being interested again in the U.S. market and wanting to feel around for some values, that we've come down towards levels that are competitive with South America, Brazil, and Argentina. But that's really part of the back and forth here, is that late last week and then to start out this morning, we did not have any of those flash export sales announcements. Those come out every day if there's a sale of more than 100,000 metric tons of grain. And we did, as you mentioned, observe some of those after the latest break, starting with the first new crop soybean purchase made by China for the season, and then a 500,000 ton new crop soybean sale that was linked to China. You also had a big corn purchase where we wonder, is it just routine end of the season positioning, or is this all of a sudden some value buying? All of that, in the midst of these questions about the trade relations with China, the Chinese economy weakening, China very much a big deal lately, all of a sudden again, and including at the start of this week.
Well, what about the wheat? Wheat looks like it's literally grasping at straws right now. That's a bad pun, but anyway.
That time of year, yeah. That fits with it, really. I mean, that you've got this period where we're moving past the winter wheat harvest. We talked about this. You've had your guests on as well to confirm how solid this winter wheat crop was in so many places, certainly improved on a year ago across the southern plains, talking about some record yields for spring wheat soft red wheat across the Midwest, and also very good prospects now for the spring wheat crop. And that was maybe what delayed some of what is normally a more bullish transition into the month of July for wheat, because we get past that peak harvest pressure. But with all of the focus still on now the spring wheat and how good it looks, still with some threats, though, we got to watch out for North Dakota up into Canada. At the same time, all of that largely priced in, and finally we got a little bit of upside to show for it.
I have heard stories of some feeding locations switching over to wheat. Have you heard any more on that lately or not?
Yeah, that can be the case. I know we talked to Lori in our Kansas office who talks about the spread. She wrote about that in the CommStock report, the differential when you factor in basis, right, which you have to do because you look at, say, Kansas City futures, they're $1.75 or so in some contracts above the corn, but then you factor in what is a really relatively firm basis down south for corn, and then a sort of harvest weaker type of seasonality for wheat basis at the same time. And then you've got some competitiveness all of a sudden. We got to think about down in the Southwest where these feed users are really pushing for corn, and they're competing with the northern ethanol bid for sure. They're trying to keep that old crop grain, what's left of it, up there, and then down trying to bypass the feeders are, of course, all those trains heading to Mexico with corn exports. So that is worth watching. All of a sudden, this substitutability or the competition with wheat and corn.
Speaking of feed users, let's talk about them. The feedlots, the cattle and feeder cattle and the hog futures, they all had a really rough start to the week here. How come?
Well, the start was actually positive, at least early on, right? And then the finish, maybe the opposite of the grains in a sense, where we had some strength early on and then just failed and went lower, ultimately, I think, triggering some technical levels that were seen as negative enough for these hedge funds to bail out of position. So again, it'd be somewhat the opposite of the grains, where we're wondering about if these hedge funds are exhausted a bit from the sell side and wanting to be cautious about taking profit. It can be the case on the other end, where livestock, for cattle at least, these hedge funds have been long, and they get any sniff of worry about the economy, about the seasonality of demand starting to slow down into the rest of the summer. That's enough for them to get spooked out of some positions here at the start of the week. But I don't want to count cattle out because of what is still fundamentally bullishness regarding current supplies, which we'll know more and more about here as the summer progresses, although less than we might usually, because we're missing that July cattle inventory report that we would normally have this week.
Well, it looks like we only have, a couple more days left in this month. And then we'll have to turn the calendar. We'll be looking at August. Does that lead to fund rebalancing at that point?
It can kick off some new month type of repositioning, certainly. I think it furthers this broader transition into the second half of the calendar year. Certainly the second half, or even later in a lot of places, the row crop season, we know we're still very much dependent on August weather, especially all of the crop that was planted late. Definitely the crops that are in the north and vulnerable to frost freeze here at some point going forward. But for now, it is also a transition for outside markets, and potentially towards lower interest rates and changing monetary policy into the second half and certainly fourth quarter of the year eventually. So all of those things seem to be kicking off here as we look towards August, maybe starting to at least wrap up the end of the summer.
Is it too early before the end of the month to consider the sell-off today on livestock as window dressing or not?
I think you can. The way the livestock market has acted, you get a few days up and you're going to have a try the other way. And we're seeing that because, mind you, we're just coming off of live cattle poking to new highs for the move. Feeders have been the laggard, but this has not been something we haven't seen before, where we start on a weaker tone, a little bit worried about demand and the outside factors. We see some positions covered, but then the cash market all of a sudden turns strong again, and that's something we'd likely expect as this week moves forward into Tuesday and Wednesday. But for now, negative start, the opposite again of most of these grains, how they finished, and just I think chalk it up to trading for now.
Well, I know when it comes to the feed grains, the core of the Midwest, we're not going to be harvesting for a while. But they are kind of getting started doing some of that, I believe, in the Deep South. I'll probably be doing some stories on that later this week. But when do you expect the true harvest pressure to really start hitting the market? In the back of your mind, are you looking at maybe the end of August by the time we start getting quite a bit into the pipeline?
I think we're certainly talking about the southern harvest at that point, ramping up and seeing what results they might have in a state like Texas. Then being a little bit worried as they move further into the east, the mid-south, having well documented, been struggling with drought and high heat, still vulnerable as that crop finishes up. So we watch that every year, but I really don't think a lot about harvest ramping up in earnest until you get to September. That might be a part of living and traveling across the I-states often. And also having a lot of customers up in the northern plains and the upper Midwest, where it's not going to be until September or even October when we really have a handle on what harvest results are. But I know that's a flip in the South. It's a big country, similar to like how we track South America. I always talk about, on the opposite end of the equator, where it's a long harvest when you go from the southern tip of Argentina, say, to the northern tip of Brazil.
Any news tidbits coming out of Ukraine or Russia or Europe as far as their crop production?
Continuing to tighten, I think, our expectations about supply in the Black Sea region. That can include Russia and Ukraine, but also big player like Romania, even Kazakhstan. Lower wheat estimates, mostly the consensus there. The same is true for Western Europe, and particularly France. They're the subject of a lot of headlines with reduced wheat crop estimates in particular. The thought now being that they've got enough for domestic usage, but not much to go around for exports this season. And so you wonder about who will replace that source of supply in France, which had for last year's crop really been out there and competitive. France and Russia, the big leaders, and really determining the overall market tone. We won't necessarily have France as a big player here this year, and so that comes into the mix, maybe being a little bit more friendly for U.S. export potential.
All right. Well, Joe, thanks for stepping up to the plate here today. I know usually we talk on Wednesdays, but I just felt like with the volatility in Monday's trade, I thought I'd do our weekly talk a little bit early just because there was so much going on, and it could be fairly significant as we move forward toward the end of the month here. I appreciate that, and thanks for the help. Joe Camp of CommStock Investments. That'll do it for this episode. For producer Brianne Hendrickson, I'm Marlin Bowling. We'll catch you next time right here on the CommStock channel. Thanks for joining us on our CommStock YouTube channel. Don't forget you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.